Hello everyone and welcome back. My portfolio has been taking a beating in more recent times, down almost £700 from the unrealised gains that I had just last month. So what am I doing? Am I cashing out or buying more? Well, I'll be explaining today. I'll be going through my buys, one of which was over £700, and touching upon Salesforce Earnings, what I thought about it and its current valuation at the moment. As always, if you like this sort of content, then feel free to subscribe to the channel. Without wasting your time, the first buy for this month from me was Vici Properties. I bought nearly 4 shares for $27.94, so around £85 worth of stock. My Vici position currently accounts for just below 14% of this portfolio and comes with a massive yield that sits above 5%. For those that aren't aware, this one is a real estate investment company that owns prime real estate on the Las Vegas Strip, like the Venetian and MG Grand hotels, among others. The reason to buy this one right now is that the valuation is below $28 because it gives me a massive margin of safety from an intrinsic value that I believe this one sits at, which is around $35 to $36 in my opinion. It has had a tough run in more recent times due to the high interest rates we are seeing. And personally, I think it's a good time to buy these sorts of real estate companies because they are highly leveraged and that amount of debt carries with it a high interest rate at the current climate that we're seeing. Stocks like Vici will recover rapidly, I think, when these rate cuts do kick in. If they kick in. The dividend yield is highest in my portfolio, above 5%, but still has a growth rate above inflation, with the last dividend increase at 6.4%. Now, they handle lots of debt, as most real estate companies do, which means they are susceptible to news of rate cuts. So when there is rumour mill going around that effectively there's going to be no rate cuts, then unfortunately Vici Properties drops. And the vice versa is true. When Vici Properties is suddenly skyrocketing, it's because there is a fluctuation with interest rates being more likely, with someone on the board saying something or the Fed saying something that they maybe should or shouldn't say. At the moment, investors seem concerned about rate cuts, leading to this downturn in Vici Properties. We started off the year with people thinking there would be four or three rate cuts just this year alone, and now we might not even get one. So this has had a knock-on effect with these ones, and I've decided that if I pick up more Vici now, whenever it drops below the $27 to $28 mark, then we can see that I'll lower my cost basis, and we're already around the $30.10 mark, which is quite good for this company, but it can always be better. My next buy was actually 2 separate buys of the same company, and that was now my worst performing stock, which is Salesforce, of course. Now, my Salesforce position, I originally bought around £2,300 worth or so, around the $270 mark. Now, they have reported earnings and the market really didn't like what they saw, and it was down nearly 20% on the day to $220 from those highs of $270 that we saw. Now, the Salesforce earnings report was mixed, but I'll give you guys the brief highlights. They grew revenue to $9.13 billion. That's 11% year over year growth, underperforming slightly with the expected growth of $9.15 billion. Now, I don't think this really bothered people, certainly not enough to rock the share price this much. What I think investors really don't like is the lowering of guidance. So obviously, especially in this sort of bull market sort of times where we've got Nvidia breaking through expectations and analysts' expectations, people don't like seeing companies that are underperforming. In Salesforce case, they lowered their full year 2025 guidance on subscription-based revenue to just below 10% and lowered 2025 guidance for GAAP operating margins to 19.9%. Now, this is still quite a bit of an increase from the operating margins that we're seeing at the moment, around the 18% mark. So they are improving margins still, and quite in a big way, if you ask me. These two things combined with slight misses in revenue from what analysts expected are just sort of they don't really help the situation. So Salesforce sold off in a massive way, but when I look at this report in particular, this Q report, I don't see anything to change my thesis on this company. I've bought this one from their massive improvements in margins, and they still continue to improve those even if it is slightly lowered. And they, of course, maintained their guidance on free cash flow growth, which I find very important and one of the most important things about this stock. Around the 21 to 24% mark, they expect to increase it, which is still massively impressive, and I don't think people give that enough credit where it's due. So I attacked this one quite aggressively with my buying opportunity, so much so that I deposited quite a bit, and now it's more my largest position in the portfolio, quite unintentionally actually, as I want that still to be Amazon and probably Visa at some point. I bought over 4 shares on the day of the drop to 30 on the 30th of May at the share price of $222 per share, spending around £728 on the day. And that was shortly followed the next day by 2 further shares on the 31st of May at $217 per share. Well, that brings the total investment value up to over £3,000, beating out Amazon as my largest holding for over 16% of the portfolio. Now, the reason to buy so much is that I felt the share price was unjustifiably low, which the market seems to have agreed with, because after those two days of that drop, it was up over 7% just on the end of the day out of the blue, and on the 31st of May it was up to over $230 per share. This is still massively an acceptable buy price for me, so it's not saying that, oh yeah, it's run straight back up again. It hasn't, but it has recovered a lot from the lows of that 20% that we saw. As long as we can see this company sort of execute on increasing those margins and producing the high level of free cash flow growth for the next few years, I think it's highly likely this drop in share price will actually be quite short-lived and quickly forgotten if Salesforce is anything to go by its previous track record. Obviously, the last time they missed earnings was 2006, so that's a hell of a long time ago, really. So this has resulted in my share cost per share at the moment for Salesforce holding around the $255 per share mark. And I believe this company is worth a lot more than that, as I was buying in the $270 range. So I'm actually happy to buy at these current prices, and it'll be interesting to see what happens with this share price going forward into next week. I could see it recover quite rapidly again, but if we have more bad news, it may do the opposite. So we'll see. So that was all my buys with no sells. I didn't sell anything. Both Salesforce and Vici, I think, are undervalued at the moment. Whilst my positions that I think are overvalued, or I'm not really adding to, are Texas Roadhouse and Microsoft. They're my highest and best performing positions, but I don't see a need to add to them, and I do think they've had a good run up that has resulted in their intrinsic value sitting well below their actual share prices at the moment. Other ones that I think are fair value in my portfolio at the moment, you've got Amazon, which is around the $175 mark. I think that's very good price for Amazon. I was buying around the $155 sort of dollar price range before it went on a bit of a run up, and I moved my portfolios over. So that's why we're seeing the share price that I'm currently down on the position. I'm not really, but it doesn't matter. Around the $175 mark, I think, is a fair price for Amazon. And then we've got Visa around the $270 price range, which I actually think is very good for Visa. I'd like to add to these positions in the future. However, I can't really ignore the massive drops in the likes of Salesforce, a high quality company as it is. Seeing that massive drop just meant I had to put money towards it, really. So what do you guys think of these sort of positions? I'd be curious to see what you've been buying and selling lately, and I'll maybe give you my thoughts on it. And as always, thanks for watching, and I appreciate it, and I'll catch you in the next one.